What are the dumbest financial mistakes that you've seen?
That we've seen or that we've done ourselves?
Could be both.
Okay. I'll start with mine. One of the very first things, and I've seen some people do this, when I got my very first big boy job, I came out of college, did not have a lot of money, got my first job, had my first salary. I decided, well, obviously, now that I've made it, now that I'm successful, I need to go buy the fancy. I had a paid for truck that ran just fine, but I decided, what I need to do? I need to go out and buy a car. And I went out and I still remember I bought an Acura TL. It was a super sweet ride, but I financed it for like 5 years. The interest rate was 9.25%, and I had to have my parents co-sign on it. And looking back, I was like, what was I thinking? That car payment that I was spending every month could have done so much better. But I fell in the same trap that most people fall into. Like, I wanted more than what my financial situation was ready for. And it was a dumb bozo decision at that time.
I quickly wrote down a few of them because I love picking on myself. First of all, I was in high school driving the $1,000 Chevy Cavalier with $2,000 worth of subwoofers in it. I mean, think about what that could have been worth if I'd have been opening up they didn't have Roth IRAs back then.
Or buying NVIDIA, that's right.
I didn't buy anything. That's the good news. You don't have to start when you're 16 years old. I didn't start until I actually graduated college on saving and investing. And then I think about when I bought the internet fund. Y'all have probably never even heard of that. In my first Roth IRA, remember the internet came around, this is the like a 2000 that a lot of this stuff is kicking in 99, 2000. I put $2,000 in the internet fund, and it turned into like $4,000 or $5,000. I thought I was genius. Got all my buddies to load up in it too. We all thought we were so smart. I think that fund, I sold it out at $375. Ooh. So, I mean, I got crushed on it. It went all the way up to $5,000 or $6,000, sold it out for $375 because chasing the hot dot, those sector plays, it's boom or bust. It's just not, if I'd have bought the S&P 500, probably be in a lot better place. And then I also think about, because Bo is a CFA, and I love to brag about the Bo as a CFA because that's a very exclusive club to be in. But when he was going through the process of becoming a CFA, we had this thought that we ought to start doing some options trading.
Yeah, I had it all figured out. I had the education, so I knew how to invest.
So we were buying calls, and then we were selling puts on things. And here's what I quickly learned about options trading. You can be accurate and correct with your assumptions, but your timing can be crap.
And timing is,
because I shouldn't say short. We sold puts on or bought puts on Netflix. And we were spot on. It was way overvalued at the time that we were doing the puts, but it all, matured. And then it was 2 months later that the bottom fell. I mean, we would have made an absolute fortune on this strategy, but we were 2 months off. And it just showed us. And by the way, this was my first time screwing up options because I bought options on Apple years ago where I turned $1,000 into $4,000. Bo was involved in this too, so he doesn't get off but of course we bought the next contracts and we turned it all into $300. So, I mean, that's what I've made the mistakes of chasing the hot dot, just like we talk about. And that stuff feels so good emotionally, but I've learned that it's really the hassle factor and then the focusing on small things instead of actually creating behaviors that change your life. It's not worth it because all it does is leave scars and some carnage. Unless, we joke about NVIDIA, we joke about Apple, but as we talked about earlier, even if you hit those licks, you're still likely going to sell when it doubles, triples, or quadruples. You're not going to be there when it goes 10, 20 times your initial investment.
So what about for other people, though?
Yeah, I think what's great about our stories are these are like, I'm going to say small mistakes. They didn't seem small at the time, but there were small mistakes early on that we were able to learn from and rebound from. A lot of people that we've seen in our experience have ended up making mistakes, but they make them later on in their life, and they make them to where they're unrecoverable, right? Like, it's one thing if you blow a couple grand on options. It's another thing in the community that we moved from, where we started the business originally. There was a family that had been incredibly successful. They were real estate developers. They owned all of their real estate, all of their property, a lot of commercial property outright. The father was like completely independently wealthy. Well, his son was trying to make a name for himself and kind of continue the empire. And so he said, hey, Dad, I got this great idea. We're going to go develop this neighborhood, but I don't have the capital to do that. So we need to mortgage and put up as collateral all of our commercial buildings. And we're talking about like 8 figures worth of commercial buildings so that we can go do this development. But it's a sure thing. Community's expanding. It's advancing. And then what happened? 2007, 2008, 2009, the entire thing went belly up. So they ended up going bankrupt, losing 8 figures worth of real estate, all of it getting foreclosed on. And there was no reason for that. There was no excuse for that. The father had already won the game, but he was trying to be a bridge and provide an opportunity for his son. And they ended up completely belly up, which is just devastating to see that kind of stuff happen.
I mean, things I've dealt with that I always, I used to work with professional athletes, and I can tell you that we've had cases where, these are guys getting multi-million-dollar signing bonuses and other things, and then you find out that they financed a pool with 15% interest rates instead of paying cash. We had accounts full of cash that could have paid. I've also had professional athletes driving around cars that, the dealership wanted their likeness, so they could use it in advertising. So they give the athlete the car, and then they don't have insurance on it. They don't do anything. They're just doing whatever. And then also personal guarantees. I mean, I think about, we all know about the Michael Vick type case study when he, got the dog fighting and all those deals they call the banks and everybody called the deals in. I've seen a lot of professional athletes and I've seen a lot of business owners. And we've even, because we do commercial real estate, personal guarantees is a scary, scary thing. So that's why you always have to tell people, be very careful before you're signing on to these deals, because a personal guarantee means they can come take whatever they need to make you whole.
I have a horror story when it comes to a personal guarantee. I had a friend get a business, and his dad was the personal guarantee. For the business. Yeah. Everything was fine for the first year or so. COVID hit. The business was shut down. Someone went after his dad and after their house because of that personal guarantee, because the son didn't have the money for that.
How did it play out? Did the dad end up losing in that lawsuit?
They spent hundreds of thousands of dollars in legal fees.
That's a nightmare.
Just to try to get a settlement. I mean, it was awful.
It seems so innocent when the banks put this stuff before you too. It's because you assume everything's going to be great. That's why we always tell people, and it doesn't even have to be mistakes. I mean, I've dealt with clients who were prospects who were coming on board, interviewing us, and then I've reviewed the deal, and this is right after the 2017 tax legislation. If y'all remember, that tax legislation made it where attorney's fees were no longer deductible, and we had a client getting this, our prospect that had just signed up, was getting a huge multi-million-dollar payment from this lawsuit. It
was like a high 7-figure deal.
It was a big deal. And as soon as I looked at it, I was like, you guys have structured this all wrong. I was like, none of these attorney's fees are going to be deductible. The client is going to end up with, because they're going to pay it all to the government. They're paying all the attorney's fees. They're going to pay all these taxes, and you're not going to be ending up with what you think you are. They went to their attorneys and they're like, no, that's not true. And then I was like, seriously, this is all new legislation. I know that a lot of people have not taken this in. Go look at, and so it took 2 or 3 phone calls with them, and they came back and they go, oh my gosh, he's right. And we were fortunate to be early enough in the process, restructured the whole deal with the insurance companies and everything, and it really did result in this client getting millions.
It was like $3 or $4 million.
Yeah, I didn't want to give you, but it was a turn, a delta of $3 to $4 million. So that's the thing. It doesn't have to be a mistake. It just could be things you don't even know when you're dealing with big transactions. And we see it with account structures. Think about setting up a business. A lot of people are self-employed and they don't have an accounting background, so they don't know what's the account structure. I mean, should I be how should I do my business? S Corp? Should I be a C Corp because these qualified small business things that I hear people talking about? Or should I be an LLC? That's the type of stuff that if you just don't know, who tells you this stuff? I mean, y'all have experience with any type of success. I've always felt like, wouldn't it be nice if somebody was out there just tell you, so I don't have to go figure this out? Because I feel like a lot of times I'm figuring it out, or we're having to navigate that. And that's what I think we play a key part, so you don't have to go through this like it's your first time.
Life insurance is one of those things that makes sense for a lot of people out there, but most people just put it off because it feels complicated, expensive, or time-consuming, but it doesn't have to be, thanks to our sponsor, Fabric.
Fabric by Gerber Life is term life insurance that you can get done today. It's made for busy parents like you. It's all online. It's on your schedule right from your couch. You could be covered in under 10 minutes with no health exam required.
If you have kids, and especially if you're young and healthy, the time to lock in a low rate is now. And even if you have life insurance through your employer, it may not offer you enough protection for your family, and it usually does not follow you if you leave your job. Fabric offers flexible, high-quality policies that fit your family and your budget, including options like $1 million in coverage for less than $1 a day.
Fabric is partnered with Gerber Life, trusted by millions of families for over 50 years. There's no risk, and they even have a 30-day money-back guarantee, so you can cancel at any time. Fabric also has free digital wills, tools to invest in your kid's future, and more, all right from your phone.
Join the thousands of parents who trust Fabric to protect their family. Apply today in just minutes at meetfabric.com/ICHclips.
Again, that's meetfabric.com/ICHclips. MEET fabric.com/ICHclips. The link is also down below in the description. Enjoy.